complaints are normal. You could be a shareholder in a company like Umeme, in Stanbic, but you're not happy as a customer, so you bring up those complaints as well. It's a platform where you will actually be heard, other than an ordinary customer who may make a call to the customer service. Then you have a say in the strategic direction of the company. If they want to merge, like very recently we saw Elon Musk trying to take up Twitter. The shareholders through AGMs had the capacity to either block or approve such large strategic transactions like mergers and acquisitions. Then of course for the companies, AGMs allow them to demonstrate transparency. It's one thing to say we are doing this is how we performed, but once you have a platform like an annual general meeting, then you actually dissect the numbers and make them simple for a person out there, because not all these shareholders understand these complex numbers. So you also give accountability, then shareholders review company performance in addition with management, and the number of checks on how the health of the company is, how it is performing. Yes.
Now let's say that the shareholders don't approve maybe the dividend. Can the company actually revoke that dividend?
Yes. In fact, when companies are releasing their financial results, they propose a dividend, but it's subject to the acceptance of the shareholders. A shareholder may think that if the company reinvests this money which they would have paid to us, maybe the next financial year the performance will be better. So they may vote to reject a payout of a dividend. That has happened with Centum in the past, especially the pre-COVID years. Other times shareholders may even ask for an increment in the dividend payout. Yes.
Now let's look at, for example, MTN. When the company has made profits and they have called people for their annual general meeting, why do you have, as a shareholder, to attend this meeting? And in some cases, if you miss the meeting, can you always send someone to represent you, or a person who can stand in for you?
Yes. Just like we saw from the benefits, it's one of those unique times where, as a shareholder, your voice will be heard. That is why it's something that happens maybe once a year, in extreme cases twice a year. So many shareholders are encouraged to actually attend physically. But in the event that you fail, we have what we call proxies. You're given a form where you appoint a person who can attend on your behalf and even voice your complaints. That is important, especially for investors who are foreign, people from abroad who may find it a little bit expensive, or because of the differences in time zones and you're not able to attend online. You simply send through a broker or the custodians who invest on our behalf to attend for you and voice any issue you may want to voice. Yes.
Now let's talk about the dividend. After approval of the dividend, some companies have not declared the dividend.
Yes.
And they have been restricted probably by banks or something like that. But let's first start with why it's important, first of all, for shareholders to get a dividend. Then later we'll talk about those companies that have not issued a dividend.
Yes.
Why is it important for companies to declare dividends?
Okay. For our listeners and viewers, one of the ways you gain, especially when you invest in shares, is you receive that dividend income. So a dividend is actually part of the profit a company has made, which is paid to us as shareholders. There are companies which pay these dividends once a year, others pay twice a year. Then there are these extreme cases like MTN, which pay 3 or 4 times a year because of maybe some directives of the UCC. So you can notice that as you wait for that salary, which you expect to receive at the end of the month, if you've accumulated a number of shares in different companies, you can end up earning this passive income, which we call a dividend, frequently, which is an excellent way of gaining. Then in previous discussions we had spoken about capital gains. There are those who invest, but maybe you don't want that regular income stream and you simply wait for that appreciation in the share price. So there are two ways, two major ways shareholders can earn something. Now dividends are extremely important still, two ways. They will benefit the investor. Then there is an indirect benefit. A company which declares dividends also enjoys, of course, even to us, the exchanges. For the investor, we have seen that benefit of the return. Now, for the listed companies, we notice statistically that companies which have paid dividends consistently or even much more frequently compared to others, their counters tend to be more active. And some of the companies that have been paying regularly include, of course, as we see, MTN will be paying 3 times a year. Umeme has been a very loyal. It pays back to its shareholders.
And it pays well.
And it pays well. Bank of Baroda. Now, if you're to notice, these are the counters that trade much more frequently compared to those who don't. Yeah, so
I even saw that last evening when they announced, MTN announced book closure date 1st June. The price immediately started going up.
Absolutely.
Means people were buying.
Absolutely. Even Umeme, if you notice, from the time they declared, there is a lot of interest. Because there are people who own so many shares. So there's that increased and improved activity every time you at least pay out these dividends. Yeah, compared to those who don't. Now, when we speak about this activity, it's simply in terms, like we spoke in the past, turnover. There will be, everyone will be interested in your company compared to the fellow who doesn't. Then there is an indirect benefit of price appreciation. This increased demand, just like you've told us, the increased demand will actually bolster the share price. Like you've rightly put it, MTN has started gaining, even Umeme has started gaining compared to those who may not be paying dividends. Then of course, there's that sentimental benefit also. Most people invest in companies anticipating that at the end of the year or at the end of the 6 months, this company will give me something. Now, every time you do not pay back, people have that perception, hey, are these people misusing my money? Is this company selfish? So there is, people may lose trust and just flood the market with supply and your share price also declines. So those are some reasons I can give for now.
Now, let's talk about the companies that are not issuing dividends. We know there are very, very many underlying reasons why, but can you give us like a little bit of why you think, for example, Stanbic Bank, they are not giving out dividends, and yet they declared that they actually have profit, they have made profit, and their shareholders know that the company has made profit and they have been giving out dividends in the past. What could have happened?
You will allow me also to be not very specific with the answer, but especially from the shocks of the COVID pandemic, most listed companies, for purposes of sustainability and business continuity, I believe most of the regulators felt that if you can withhold part of this profit other than paying it out to shareholders, you may be able to survive maybe until they will return to normal. Yeah, so most of these companies, including banks, decided to restrain or to withhold dividends. But one thing which we noticed also, they did not refuse, but they said we shall withhold.
Yes,
meaning that
they'll pay it out probably at a later.
Absolutely.
Okay.
These payouts will most likely come in the future, especially when the regulators are comfortable. But like we have seen, and like you've also observed many times, ordinary shareholders may not understand these dynamics. Many people want this Kagwira. The bank or the listed company has gone through a tough time, but it's also a fact. Even the ordinary person out there, maybe you used to afford sugar, you used to afford a meal, fuel. With all these things which have happened, you may not be able to. So you expected that income to come through your investment, which didn't. So we have to strike a balance. Make the shareholder happy, yet these listed companies should also be able to withstand the storms that come through some of these difficult times.
And I think that is reflected in their share price as well.
Yes.
Like you said, every time you withhold the dividend, share prices are definitely going to go down.
Yes. Down and stagnant.
They will go down, yes.
Absolutely. Even when you perform very excellently, many people expect, let me get that small income.
Yes.
That is true.
And we've seen Umeme, we talked about Umeme last time as having the highest turnover for the first quarter of the year. Has it sustained that throughout these last weeks?
Yes. It has. I think we shall also be speaking about the performance of the market last week. They have. And unlike others, they kind of pay much more regularly the dividend.
They pay much higher dividend.
Yes.
Actually, I saw in their report they were saying we would rather pay our shareholders and not get much of the profit. So they are so interested in their shareholders.
Yes.
The challenge I saw as well is that most of these shares I saw, for example, Umeme, 23.2% is from NSSF.
Yes.
And then a very huge chunk of those shares is from foreign investors. I don't know how we are going to address this issue because all these dividends now are going out of the country.
Yes.
How can we as a country encourage these local investments so people can take these dividends into our economy and not rather shift them to other economies?
It's a very right fear, Anthony. And like you've rightly put it, almost 90% of our turnover is dominated by the foreign investors. And with the number of stakeholders such as the Central Bank, Capital Markets Authority, Ministry of Finance, we are as much as possible encouraging the locals to start participating in our domestic financial markets, because every time you have even these listings, but those foreigners who give us by the foreign direct investments, they bring in a lot of cash, but when you're paying out, they take most of it out. So we are conducting a lot of awareness. That's why in previous discussions we have emphasized that even as low as 5,000 shillings, 10,000 shillings, you're actually able to buy shares. Then for treasury bills and bonds with as low as 100,000 shillings. So awareness is the way to go, but also to simplify the investment process. These days with your phone, you're able to register as a shareholder, so you don't need to run around. You're able to even transfer money to your stockbroker with ease, even with banks through the agency banking models. So those are some ways we are trying to undertake to reduce this impasse.
Yeah. Someone may ask, you've talked about, for example, the capital gain that I can gain from selling at a higher price. Now, how do I know the people out there who are in need of buying shares? Do I act like a vendor going around saying, hey, I have shares in Stanbic and I need to sell them? How do I get to know who to sell my shares to?
Okay, interesting. Just like any market, there are always buyers and sellers. Now, the way our markets are structured, we have intermediaries. For shares, we have stockbrokers. Then for treasury bills and bonds, they are primary dealers. Now, these people whose job 24/7 is to buy and sell, they actually see that, hey, by the way, so-and-so is buying, so-and-so is selling. During these interactions, they send you market updates 3 times in a day. When the market is open, midway the session, and when the market has closed. So they give you indications of demand and supply. They tell you so-and-so wants to buy at this price. In case there is a mismatch, you can actually negotiate. They can allow you negotiate. So, but buyers are always there, and it's brokers and these intermediaries who have the direct connection. You may not know, but they do. Yeah, so for you, you're limited to that discussion with the broker, the stockbroker.
So long as I want to buy shares, I always have to approach my broker.
Yes.
And the broker knows someone who wants to sell the shares.
And to buy.
So the intermediate.
Yes.
Now, how about the Securities Central Depository account? I saw, I don't know if it's the director on your Twitter. He was talking at the MTN annual general meeting. He was saying, your money is safe, your shares are safe with the Securities Central Depository account. Talk a little bit more about it for people to understand how it works.
Okay. Yeah. So the stock exchange in itself is a financial institution. In fact, we are like a bank. But unlike banks which collect cash, for us, the financial instruments, we focus on shares, treasury bills, treasury bonds, corporate bonds, and these other paperless financial instruments. So every time you buy a share, just like cash, it's deposited somewhere. Now, that place where they are deposited is what we call the Securities Central Depository account. Even when you sell, those shares are removed from that, from that SCD. So just like the way you can walk to a bank at the end of the month and they give you a statement to show you all your credits and debits, similarly, you can come to the stock exchange and we give you your SCD statement showing you on this day you bought these shares, on this day you sold, and this is your balance. Yeah, another key feature, unlike the bank accounts where there are charges, there are some monthly charges you pay every month. With these SCD statements or accounts, there are no charges at all. But when you want to borrow, for example, that benefit we spoke about a while ago, in that you can take your shares as collateral to access credit. So you give them your statements, that creditor can come and do what is called the lien. They take over ownership until you pay. You pay the cash, then they transfer the security back to you. So in a nutshell, that is what the SCD is.
Yes. Wow, thank you very much. We are going to go into a short break, ladies and gentlemen, but when we return with what has been happening on the market for the past couple of days and weeks, for maybe 2 weeks ago, as we see who are the gainers, who are the losers. Do we have any treasury bonds or bills? I'm still with Mr. Andrew Mwima, who is from the Uganda Securities Exchange, and he's here to give us more about what's happening on the stock exchange of Uganda. Don't go anywhere. We will be right back.